Ladies and gentlemen, there was a bloodbath in the stock market yesterday, and this largely in the sector involving semiconductors and chips, and is now spreading across the rest of the high-tech sectors. And as a result, we have got the Nasdaq crashing significantly, and also the S&P 500. Is this the start of the long-awaited crash that we are looking for? Today, I will analyze for you the reason why the stock market crashed, and I will give you a very important hint towards the end of the stock market that the worst is yet to come. So the title of today's talk is Wall Street Bloodbath. Now, some people might say that, oh, this minor little dip is not a big deal. It is a big deal if you just focus on the semiconductors and chips space. It is a massive bloodbath. Let's not sugarcoat it and let's not trivialize it. Now, is this the worst you can get? Well, let me just say that, watch till the end and you'll get a more clearer picture. For this is the biggest technology sell-off since April 2025. So Wall Street suffered a massive sell-off, and we have got the S&P 500 fell by 2.64%. Now, 2.64% fall in one day is not normal. It is very significant. And the Nasdaq fell by a bloodletting 4.77%. I haven't seen the Nasdaq 100 fell by 4.77% for a very long time in one day. As a result, we have got $2 trillion wiped out from the US stock market in one night, and the semiconductor space itself has a $1.3 trillion wipeout. So let's not sugarcoat it. This is the biggest technology sell-off since the Liberation Day tariff crash of April 2025. Is this the beginning of a major crash or a correction within a powerful bull market? So let me attempt to answer all these questions for you. First of all, let's understand what caused this bloodbath. There are two triggers essentially that causes bloodbath, and possibly a third one coming in a few days' time. So the first trigger is a trigger caused by Broadcom. And I'll elaborate more shortly, but the AI chip stock suddenly failed to meet Wall Street insane expectation. It's not that they are doing badly. It's just like they are expecting a school student to hit A plus, but he got an A. So A not good enough. Sounds like a tiger mom, right? So that's what the stock market investor did. They beat up the school children for scoring an A and not an A plus. So the AI chips fell tremendously. Sounds like a tiger mom from Singapore or in China. So trigger number two is that there was a job reports that came out, and in US, the job report was very good, right? There were red hot job reports, but everybody sell down on the stock market. And later I'll tell you why Donald Trump was furious about this, because the red hot job market actually signals that, hey, it could be inflationary and the Federal Reserve might have to increase the interest rates. So compounding these two effects coming together, we have got the stock market coming down ferociously. So the bond yields also rose a lot, which signifies that this is not just about the AI chips. It's about the jobs market as well, because when the bond yield rises, it's generally in anticipation of an inflationary spike. So we have got both an inflationary pressure and also a technology pressure, and that caused a panic reaction across all the sector. I will let you know a third trigger towards the end of the video that might come. So we now have 2 out of the 3 perfect storm hitting, and the third perfect storm might be here soon. So as a result, wow, the AI chip stock fell. So let's take a look at the first first stock crash that's caused by AI chips. Well, the AI chip stocks imploded. This is one of the worst days And if you take a look at it, AMD fell by 10%, Broadcom fell by 7.9%, Nvidia 6%, ARM 12%, SanDisk 11%, Intel 11%. They just crashed massively. And this is not the only list, but this is a pretty good representation of what happened yesterday. And is this the worst to come? I don't think so. If the expectation of Wall Street is just way too high. Now, it all started with Broadcom. Now, Broadcom, I do have a bit of stock. Now, this was a stock I bought something like close to 8 years ago. And I don't stock pick, but we do, at that point in time, we were experimenting with a algorithm called a magic formula, and it spit out Broadcom as one of the counter. We bought it out, the entire basket. That stock has went up by 10 over times so far. 10 over times. A pity I didn't buy a lot. But it was great result. So Broadcom posted solid results just a few days ago. But these results aren't enough to meet crazy Wall Street expectation. So as a result, this triggered a market-wide question. Maybe the AI demand is already peaked and maybe it's not as rosy as we thought it would be. So like the tiger mom, we expect the kid to score A plus and we scored only A. They whipped the child to death and Broadcom fell by nearly 20% over 2 days. Then the panic selling went across the entire semiconductor sector. And as a result, the investor confidence in the AI growth suddenly gets shaken. And this is really, in my opinion, an overreaction. But overreaction does matters. But this is really an overreaction because I do think that the AI story continued to boom. It's just not booming fast enough for the growth-hungry Wall Street. So AI giants were all hit collectively. Nvidia lost $300 billion in market value, and plus a lot of other stocks as well you've seen. So $1.3 trillion in one session. Then this haven't account for the previous day's session. So $1.3 trillion vaporized from the whole stock market. So is the AI story broken? No lah, I don't think so, because the AI application space is still developing rapidly and everybody is still very upbeat about it. We're still on the infancy phase of adoption and so on. Transformation of high-cost industry into efficient industry are still going on with the help of AI. So why would the AI story be broken? However, everybody is expecting the student to score A plus. So when they score A, it is really a painful disappointment to many of the hungry Wall Street analysts and investors. So I think this is a massive profit taking rather than a structural collapse of the AI's investment thesis. So I think that this story alone by itself is not likely to sustain for very long in terms of the fear and panic, okay? But however, when you combine this with other fear, that's a different story. So this is where we now dovetail into trigger number 2. There is a red hot jobs report. Now, we all expected AI to wipe out quite a lot of jobs, and surely it did. But however, in US, because the economy is booming fantastically, and this one, you have to give credit to Donald Trump, it added 172,000 jobs when they only expected 80,000 jobs. That means more than double the expectation. And the unemployment remains at 4.3%. And as a result, wow, every of the politicians should be happy for doing a good job, but Wall Street is not happy. Why is a good news now becoming a bad news? That's because when there's a strong job reports, it signals that the economy is red hot and doing fantastically well, and everybody's prepared to spend more money, and that will drive up inflation. When inflation is high, the Federal Reserve will find it difficult to cut interest rates, okay? And at the worst, may have to increase interest rates, and that will cause technology stocks to crash terribly. So this is a Wall Street counterintuitive logic. So when the economy is good, stock market is bad. So of course, this is something that seems very illogical, but this is absolutely the thesis that Wall Street has been following for decades. Now, just to be very clear, bond yields are responding seriously. So we have got US Treasury now having a crash, and the yields have gone up significantly, and the 30-year Treasury yields have gone up above 5%. And technology stocks in particular are very sensitive to rising interest rate. So when Treasury yields goes up, generally it's a signal that the interest rate have a pressure to go up as well. And let's not forget the Middle East situation is far from over. In fact, it is worsening. That I'll deal with it in a separate video or tonight's live stream. So when you combine an inflationary pressure reinforced by Middle East turmoil that is worsening, wow, then we'll have inflationary pressure and as a result, an interest rate hike pressure. Our good friend Donald Trump is now furious. So Donald Trump is furious, right? He's very angry. He said, really, that's ridiculous. When job markets are doing well, stocks should go up, not down. So we are creating great jobs. How can you sell down the stock market when I'm doing a good job? So growth, he actually said is strong jobs are good. Growth creates prosperity. It does not automatically create inflation. So President Donald Trump is very surprised and furious at the stock market reaction. He's outright lamenting at all the stock market investors. He views strong economic growth as unambiguously bullish for all equities, not as a trigger for people to sell down. And let's not forget, he does have a lot of money in the stock market as well. So he's very upset that this thing is happening. Let's all come to our senses. This is one of the most predicted stock market correction that is coming. So let's not forget what Tom Lee has said. I'm a big fan of Tom Lee. I didn't say his prediction is 100%, but he has been very accurate. And I said it for at least 50,000 times that Tom Lee has predicted that 2026 would be a volatile year, especially the second half. Now, he has came out in response to yesterday night's Bloodbath, and he outright say he don't think this is the worst. He thinks that a bigger market downturn is expected from now to October. He outright say, go watch his CNBC interview. And this kind of sharp pullback are very frightening. So now let's be very clear. He believes that a sharp downturn is coming. Okay. And it's from now all the way October. Do you want to catch this opportunity to crash buy? Okay. Better learn how to do it. Right. Some of you say, okay, I'll just buy. I hope that everybody knows how to do it. It is not as simple as just say when you crash, you buy, right? Buy what? Buy how much? When to buy? How to buy, right? Which dry powder to use, whatsoever. All this requires some training. And I hope that you guys will get the proper training. So now, the most important statement he actually said is, after this crash is over, he believes that the US stock market will be in for a multi-year phenomenal bull run. So it is good for us to stay convicted. And this is where I would give you more details about this in the live stream tonight. So is this the start of the market testing of the new Federal Reserve Chairman? Maybe. It's hard to say. The question is, will he be tough on inflation? Will he support Donald Trump's pressure to have a rate cut? Or will he resist Donald Trump's pressure? Will he be independent? Wow, all these questions will be something that we will know, actually, to be frank, in a few days' time. Now, this is also timely for me to tell everybody, Bitcoin is sending a warning signal. I've got a good co-founder in the business, and He is a crypto expert, and he believes that Bitcoin is probably sending a signal ahead of the stock market. So let me be candid about it. I'm not a believer in Bitcoin as an instrument, but I use Bitcoin as an instrument of signal, a radar. So Bitcoin from its all-time high of $124,000 per coin has dropped sharply towards $60,000. $60,000. And for those people who are in technical analysis, it's broke below its 200-day moving average. So it's a very bearish signal. Now, I don't know we'll go down any further because I don't believe in the value of Bitcoin, but it is a good signal that risk appetite around investors and speculators are coming down. So I think it's worthwhile watching the Bitcoin as a signal for the stock market. Now, this way I want to share everybody that I talk about there are two triggers that caused yesterday's stock market to go down. Number one, Broadcom and the rest of the chip market is have disappointed the market. And second was the red hot job market. The third one, very clear. In a few days' time, June the 10th, the CPI report for US is coming out. And there are three outcomes. Number one, it's hotter. Number two, it's colder. And number three, it is same as what it is. So these three outcomes will determine outcome. With the Middle East situation so bad and oil prices so high, what do you think the outcome will be? I don't know, but I think just logically speaking, the inflation is going to be red hot inflation. So if that's the case, then we would have a third trigger. And if you combine all three triggers, then I think we will have a continuation of this terrible market drawdown. So we will know on 10th of June whether the CPI is going to turn red hot and whether the Federal Reserve will react appropriately to such triggers. So what to watch out for? Clearly, 10th of June, I'll let everybody know. So please remember, hit subscribe to the release of the CPI data. And also, I will also tell you what some of the Federal Reserve governors will release some hints of what the direction would be. So if this represents an opportunity, wow, I'm not going to miss it for myself. And I do believe that the AI story continues to be a strong one. And this might represent the crash buying opportunity that we have been waiting for quite a few months. Thank you everybody for watching, and I'll see you guys in a few hours time in my live stream.